I've been trading London session for over 3 years. I'm going to show you exactly how to catch moves like these every single day. I'm going to give it a complete guide on how to trade London session, as well as my simple 3-step strategy that gives me an 84% win rate, and also showing you the best time to trade London session. So first, you need to understand the characteristics of London session. It's easily the highest volume session. The three main sessions are Tokyo or Asia session, you have London session, and then New York. Tokyo seems to be lower volume, more range bound, where London you have volume coming in, and New York tends to be one of the most volatile sessions with lots of news events coming out in that time as well. I trade both Tokyo and London session on gold, and they both give pretty unique opportunities. And there are certain times you really should be avoiding if you actually want to make money. So depending on your style of trading, if it's break and retest, if it's mean reversion, if it's a breakout type of style, you want to be trading at different times. So in London session, this favors more higher volume strategies. So if you're more of a breakout trader, trading at London Open would be a good time to trade. For me, I'm a pullback trader. I don't really enter on the breakout. I wait for a pullback first. So I'm going to show you the best time if you're a pullback trader when to trade. But one of the most important things you need to keep in mind when trading London session is how Tokyo moved. So how the previous day moved. You want to keep that in mind because that will heavily affect London session. So I trade that third hour of London session using a pretty simple 3-step approach. I've covered this before, but simply step 1 is just to find overall direction. It can be bullish, it can be bearish, it can be range bound. That's still direction, it's just going sideways. For step 2, I just look for a basic area of interest or level. So where has price reacted to in the past? I'm looking to buy in that area if I'm looking for continuation. It could be break and retest, it could be market structure shift. We'll go through some examples. For step 3, it's just an entry model. It can be a simple break and retest. It can be a shift in market structure, a change of character, anything like that. But if we just look at current price action at the moment and get rid of this, we're going to first focus on finding our overall directional bias. Pretty simple ways to find that when you're trading London session is just to simply look at how Tokyo moved. Where are you? Where's price in the previous Tokyo range? If you're kind of near the bottom half of that range, I tend to look for buys. Where in the upper half, I tend to look for sells. So the start of London, you're near the high of that range. I tend to then look for sells for more mean reversion type of trade. Why is that? Simply because price is a push and a pull. It's a wrestle between buyers and sellers. When you have a big push up, it leads to a lot of inefficiencies. And people that are buying like to take profits, so it results in selling off the positions, and they correct that move. So price is a push and a pull. Think of it simply as like an elastic band. The bigger your push, the more likely you're going to have a snapback. So higher volume moves have higher volume corrections, and you always want to keep in mind that push and that pull. That's just the characteristic of price. If you're high up, especially in the previous Asia session range, I'd look for a sell. If we're near the bottom, I'd look for a buy, but that's only one confluence, one variable to keep in mind. So the previous Asia session range, but also keep in mind overall structure. So structure can be broken down into internal and external, or low time frame and high time frame. If we have a high time frame uptrend, you're going to have like low time frame structure. So you might have, as we can see here, we're in a high time frame uptrend. Gold has been extremely bullish recently. So if we just look at this low time frame market structure, we're making lower highs and lower lows. So we've been breaking structure. But if we then zoom out and look at high time frame market structure, we're clearly making higher highs and higher lows. So you want to align the low time frame with the high time frame. This is like one of the biggest mistakes people make, is that they see prices moving bearish on the low time frames, and they say, oh, why wouldn't I look to take a sell based off that? And then they get stopped out and they're not sure why, because it's clearly moving bearish, but they haven't kept in mind the higher time frame context. So you really need to keep in mind, you're looking to align different things. So you're looking to align both the internal and external structure. But where are we looking for that reaction to occur? This is where we kind of move on to the second step, which is more areas of interest. Pretty simple way to find areas of interest. It's just where price is reacting to in the past. You can just go simply onto the line chart. You have highs, you have lows and highs. I would just draw a zone around where price is reacting to. So it doesn't have to be the most, accurate, just a general sort of area, I'm looking in this area of interest to look for a buy after we get a reaction to this. It could be a structure shift, anything like that, to take a trade here. We're currently still low time frame bearish. What would then I be waiting for to take a buy? Or simply I'd be looking for an entry model. So you could buy there, but I'm going to be a bit more patient and wait for some extra confirmation to take a trade. We've had the previous 4-hour candle close bullish. We've had pretty weak candle close on the hourly, 50-minute, 5-minute, not looking that line bullish. So I think we're just going to wait for some more confirmation on those time frames. If we just have this there, okay. So if you just look at this low time frame structure now, it's looking a bit more range bound, a bit kind of not the best, but if we give context to that with high time frame, we're kind of around these previous lows, making high highs and higher lows. And we've had a break of this low here. We've had a break of this low, and then we kind of had a big strong reaction off that break of this high here. We've tried to then continue moving bearish, but we couldn't break this low. We couldn't even break these low time frame lows. We've had a strong reaction again off this area of interest, and we've broken this low time frame high as well. So this is all looking pretty good, even though it's not really showing many like really clear breaks of structure. You're getting pretty strong reactions off these lows, off this area of interest. So this low time frame is looking pretty good. We're struggling to continue moving bearish, struggling to break lows. This low time frame is now starting to look bullish. It's now starting to align with that high time frame. We've had a 15-minute candle close bullish above this previous open close, so above this structure. With 5-minute type 3 close bullish, so we've broken low, broken high, come back into retest here, and we have the 4-hour candle flipping and the hourly candle flipping bullish. So all these time frames are looking a lot more bullish now, and you've created that bottom wick on that 4-hour candle. So this is looking really nice to look for a buy. Some pretty nice structure shifts. So my favorite entry model is just a simple shift in market structure where you break a low, then break a high. Easiest way to trade. And the thing is, you can align this off like different periods of structure. So we have kind of this break to a low, this break to a high, and then come back into retest. So that can be seen as a structure shift. But if we look in a little bit lower as well, we have low time frame, break to a low, break to a high as well. So this is like a low time frame structure shift. We respect these previous lows, and we have a pretty strong reaction off that area of interest. With this 5-minute and 50-minute candle structure, I think this is looking pretty good for a buy. So I'll just place it below that previous 15-minute candle. So you have this 15-minute openings and closes for a pretty nice trade here. And what would I target? Because you're all more with high time frame, you have a pretty nice little target. You kind of at the low of that Asia range as well. So we'll have a look at how this plays out. So yeah, pretty nice reaction there. So it's a pretty nice trade that played out using that previous Asia session structure, using that simple 3-step approach, using direction, area of interest, and then an entry model. And like if you're going to get anything out of this approach, is that you're looking to stack a lot of different confluences. So I find direction by looking at previous Asia session, by looking at high time frame candle closes, high time frame structure, low time frame structure, aligning everything. You're not just looking for one or two things. So we're going to cover another example of trading that 3rd hour, that new 4-hour candle in London session, but this time it's a little bit different, where you have extremely bearish conditions and we're looking for a sell. So we had a previous 4-hour close bearish. We're making lower highs and lower lows. Overall structure is looking pretty clearly bearish, pushing towards these previous lows around here. So same as the last example, we're simply just looking for that low time frame structure to align with that high time frame structure. So we have that new 4-hour candle, that first minute with higher volume coming in. So high volume at that new candle open. And we're simply looking for alignment of all these different time frames to take a nice, clear, clean trade. So if you just jump forward to that 30-minute candle close, what are we looking at here? We have all time frames aligning, looking bearish here. Look at all that. Really nice. And we have this low time frame aligned with this high time frame as well. We are kind of low, but we have such a strong confluence here. It's pretty easy, pretty simple to look for a trade. So I'm simply looking for this 30-minute candle to create a top wick on that type 2. We can just take a cell around here in this kind of reaction sort of area. If we draw that to here as well, previous lows, we can put a stop loss above that as well. And then for structure, I'll probably just target around this area of interest. So we have some previous reactions. So looking pretty nice. Everything's kind of aligned. Our stop loss is a point of invalidation. If we break this high or we flip, it's probably not the best sort of trade. So there we go. Pretty nice, clear, simple. Aligning all these different time frames with that external structure, aligning that with internal structure. Looking for a shift. I find the more time frames align, the better the trade. And DXY as well. I use that for added confirmation. So if we just go back to what DXY was looking like, we had DXY shift bullish. So we had a break this low, break this high. Pretty clear, simple. Shift looking bullish. We had these time frames as well, all looking bullish. So aligning DXY with gold, with all these different time frames, for a pretty simple, nice, clear, high volume trade. Trading down that new 4-hour candle for decent volume as well. So that's how I trade London session, trading around that new 4-hour candle open at that 3rd hour, using that simple 3-step approach, finding that direction, that area of interest, that entry model. And I'm just looking to align as many different things as possible. I'm not focused on 1 or 2 things. I'm trying to stack things and align probabilities in my favor. And it results in a pretty good win rate with a 1.5 risk to reward on average. And the more things you align, the higher your win rate is going to be. So the higher expectancy of each trade. So I hope this helped in trading London session. If you want me to cover New York session, leave a comment. Or if you want me to cover other things such as how to trade market structure in more detail, how to adapt to different market conditions, just let me know and I'll cover that in the future as well.